Hey everyone, welcome to a Optimum FX weekly analysis. It's currently the 24th of October today, 2021. So as usual, we'll be doing a technical and fundamental analysis across our major currency pairs. Going to be looking at gold and our global equity markets. Okay, so 24th of October today. We do have to keep in mind that it will be the last week of October. So we have to be very cautious of end of month flows. We've got to understand that banks, hedge funds, institutions will be starting to close out their orders due to it being the end of the month and propping up the market for the next coming month. Okay, so we do have to keep that in mind. One thing that I'd love to share with you guys is that historically the US dollar loves to be bought up at the end of the month. You know, just to especially especially if dollar's been in a bearish structure for the majority of the month, there's a very good chance that dollar just loves to rally. Like it's just a historical thing that I picked up from my experience from trading. So to me, it would really make a lot of sense. But I'm just going to adapt to price action and what the market's telling me and what price is showing me. But yeah, the fact that we failed, we actually reached the monthly high, at the start of the month, 94,500 roughly. And after those highs, after failures to break above, we have just been on the strong bearish structure, right? I wouldn't be surprised once we clear above these highs at 93,700, we potentially snap back in this range and possibly come back up to 94,150 to this previous high. I don't think we are gonna go to 94,520 because as we know, main reason why dollar's been rallying fundamentally is just due to the tapering rumors and potentially hiking rates as soon as next year, which realistically I think that's just too fast. That's just too fast. There's going to be a bit of disruptions in the equity markets, and especially with the dollar itself. So that's just my opinion. But yeah, especially with tapering, obviously that decreases the supply of dollars, less printing of money, and props up the demand. Hence why we've just had this strong bull run. Okay, so anyway, I want to go to our economic calendar and understand what macroeconomic data is going to release. Going to quickly skim through this because I don't want to spend too much time, talking about and going into too much detail about what each data means and how it can impact their respective market. Okay, so on Tuesday we do have Case-Shiller Home Price Index, Housing Price Index, New Home Sales, so just like home sales data on Tuesday. And on Wednesday we do have durable goods orders, so that'll be a very good thing, which definitely ties into GDP and trade balance because it tells you what industries and sectors are getting a strong outflow or a strong surplus in the coming months just with the orders that they've received. So yeah, that'll be a very key thing to understand, and you can definitely tie that in with GDP, which will actually help with the preliminary GDP numbers that actually come out later in the week. On Thursday we do have, as usual, weekly jobless claims, and we do have preliminary GDP annualized for Q3 and pending home sales data on Friday. We do have personal consumption expenditure price index month over month, and yeah, we've just got a lot of consumer sentiment data as well, such as personal spending, and we do have Chicago Purchasing Managers Index and Michigan Consumer Sentiment Index. Alright, so moving on to England. England is going to be a very quiet week. We just have a Bank of England members speaking on Monday to start the week, and we just got consumer credit and money supply numbers as well. Mortgage approvals, but realistically, that's not really going to bring massive impact. I'm not going to see big volatility with sterling or UK equities for that. Next thing we have is with Europe. So Europe, we do have ECB Bank Lending Survey. Surprise, surprise. This meeting or survey, should I say, is going to be released, before the ECB interest rate decision. So yeah, we have that on Tuesday. So that will that will just set the tone for the ECB interest rate decision. It'll be highly unlikely that they're going to differ from that tone, because that will, the ECB Bank Lending Survey will give you like a good sentiment of what the ECB's interest rate or monetary policy stance is going to be. Okay, so on Wednesday, you got money supply, not majorly important. On Thursday, we do, as I said, we do have consumer confidence, business climate numbers, industrial confidence as well, and we do have the ECB decision as well. So especially with the European, especially Europe at the moment, so just with Europe at the moment, the only thing that the ECB has been saying over the last few weeks, if anyone's been reading the headlines from the ECB members, is just with the temporary spike in inflation, saying it's transitory, and essentially they can't really provide any forward guidance as of now, just because with the current supply chain issues, supply bottlenecks, and so forth. But honestly, this can be me get into a different discussion, but I see a lot of people talking about hyperinflation and so forth. Like in America, Europe, there's no, there's no supply of goods and services, there's no foods and so forth. Like, to me, it's all noise. It's all noise. I mean, you can have your political views or whatever, but at the end of the day, like, hyperinflation will not happen in any major economy. So major economies are the ones I'll be talking about, like US, Canada, Europe, England, any of those countries, Australia, New Zealand, and so forth. Like, hyperinflation, it would not happen. Like, to me, it's just noise, just to create some short-term fear, and then just to prop up market in their favor so they can get in at better positions. Because to me, like, it's all by design, right? And there's a reason. Like, this is me getting a whole different discussion, but this is just me saying from my experience in the markets, what the central bank members are saying. They are the market maker. They will put price to wherever they want. They'll have a dovish sentiment, right? And then a week later, after the interest rate decision or monetary policy meeting, they'll say something completely different. And then it'll just be like all by design, or just like a liquidity grab or pullback to this certain demand level or so forth. But once you see those things in action, it's just repetition. Like, at the moment, they're always talking about, there's a sudden spike in inflation, obviously due to the supply issues caused by the COVID variants and the COVID issue, so forth. But honestly, it's just all noise. It'll be phased out eventually. Okay, so that's me going around, but that's just my opinion. Moving on, so on Friday we do have the end of week GDP and CPI numbers coming as well, so inflation numbers. So moving on to Japan on Thursday, we do have retail trade, and we do have the Bank of Japan interest rate decision. Okay, on Friday we do have CPI numbers, unemployment rate, and industrial production numbers being released. Moving on to Canada, Bank of Canada's got the interest rate decision on Wednesday, and on Friday to end the week we do have GDP numbers being released. Okay, so moving on to Australia and China, there's no Chinese data being released this week, so we do have CPI numbers being released, and we do have import and export price index. And to end the week, we do have retail sales, so we do have consumer confidence, consumer sentiment. So retail sales is just consumer sentiment numbers, so it's really telling us what the output of retail production is in relation to the consumers. Okay, so got to keep that in mind. Alright, so now let's go to the charts. Alright, so very briefly, as usual, always on the high time frame, let's just quickly map out our technical price points and potential trade ideas with the fundamental confirms. Okay, so firstly, taking my key levels off because it can be a bit noisy and messy for people that don't really like to see like these certain zones, but just to give you like a brief reason as to why, like to me, as to why I've got these zones. So these zones are here because they're historical price levels to me. You know, I've marked these zones out. I don't know, probably over the past like 10 years, and like to me, like I'm not saying every time, but let's just say like 70 to 80% of the time, like these zones will be respected somehow, you know. And yeah, this is just going back to historical price, or like, you know, we see this tight range here, right? Like I mapped out these zones maybe like, I don't know, a year ago or something. Like a year ago, like I don't really move these zones because to me they're just historical price levels. All right, so that's enough about that. I've got a video on my YouTube which explains how I mark out these prices, but you can always check that out if you want. I'll be sure to leave a link in the bio so you guys can refer to that and understand how I mark out these prices. All right, so firstly, we're on Australian dollar. You know, we're actually still, like now, you know, considering that we are having continuing to start to rally up, and we see this strong bullish structure, see the strong trend or bullish channel, and we're just pushing to the upside, like very strong. So what I'm seeing here, after we did, you know, start to close above these highs here, what I'm really liking, because I don't really have a need just to sell the Australian dollar as of yet. The only way that's going to happen is if Dixie creates a high time frame counterbody support at its current lows at around 93,600, we can take some corrective sells, okay? But I don't really have a need to start selling the Australian dollar, because to me, in the lower time frame, this is just a lower time frame bearish corrective structure, okay? Right. If we get some high time frame counterbody closures below 74,600, yeah, I mean definitely, I can take some sells, okay? I'm taking some sells down to here, okay? Down to here, and you know, that'll be roughly like a 20 or so pip move, and then I'll be taking these accordingly, okay? Then I'll be taking these sells, all right? These sells, retest, come down here, okay? But realistically, if we generate a high time frame counterbody support and don't close below here, I'm just taking buys. But overall, my sentiment, I don't really like. We can adapt to some corrective sells, but I'm only playing down to the previous level, and I just know how bullish the Australian dollar is, you know. So with that being said, if we do see continued outflows with Dixie, we can start to and we do generate a high time frame counterbody support at our current level at 74,600, yeah, I can definitely start to take some buys, and once we clear above here, safer buys and continue back up to the next high time frame key level, okay? And when I'm looking at price, next I'll probably be looking at 75,940, and from where we are right now, you know, that's probably about 130 pip range, okay? So moving on to euro dollar. All right. So euro dollar, we've been on a strong bearish, high time frame bearish structure from failing to break above 119 flat, and now we're starting to get some high time frame rejections at these key lows here at 115, roughly 200. Okay. So now I can definitely see a high time frame bearish, high time frame order block being formed, right? So roughly with these lows here and these highs here. Okay, maps out with there, these previous highs here, these lows. All right, so the current, with the current price that we're sitting at, we're failing to close below, these, we're failing to close below, these previous counter bodies. So one thing that I've discussed a lot is you have to wait for price to close. Okay, when price closes in a certain area, right? So like here, okay, so if you close above here and then retest, like to me, like that's just an optimal entry, and that's just the last buyers getting back in, and then you come up to the next liquidity level or key level, whatever you want to call it. Okay, so here, if I can get like a nice retest at 116,200, I want to take some. I want to take some high risk buys. Okay, if if we don't pull back into this back into this area, you know, that's just showing you a lot more that's just showing you a lot more buy side liquidity, a lot more buy side momentum, whatever you want to call it. Okay, because like throughout this week, you know, we've just been retesting this previous order block high, failures to close, and we've just been starting to rally back up. Okay, so for me personally, what I'm looking for, I'm looking to take these buys with from 116,200, and honestly, if the ECB decision is to start, you know, phasing out the pandemic emergency bonusing program, which you might have seen the headlines, PEPP program, which is just them just printing money. Like it's just they give it all these fancy names, but at the end of the day, they're just printing money. So yeah, if they start to phase that out, because they're talking about phasing that out early next year, but they're also talking about bringing in a new program, which does the same thing. It just prints money, because they want to. Obviously, yeah, they want to taper it and then fully disregard it, and then to see how the economy is. You know, it just be a trial on how the economy survives without all that fiscal assistance. Okay, so anyways, that's enough about the fundamentals. But if the ECB decision is very hawkish, and they actually talk about, you know, minimizing their PEPP program spending, yeah, definitely we're gonna break above here. That's bullish. Correct this initial downside move, and then potentially play in this little range here. Okay, these lows here, play back in this range. There's a very good chance, but just understand this, right? Before we snap back into this previous range and correct this initial downside move, all right, we will have to come back here, retest these previous highs, and continue back up. Like that'll be like an optimal move with Euro this week. Okay, so moving on, going to GU. As we know, GU's been bullish as fuck. Let's be honest, like GJ's been a different beast. You know, GJ's been a different beast. Nearly went off 1,000 pips. But let's just focus on GU right now. So after bouncing from these lows at 134, is that 250? You know, we have started to come back up. I was actually expecting price to come to at least 138.775, at least to these previous highs here, or even potentially the 139 flat. And fundamentally, the only reason why sterling's been so bullish is just because the Bank of England have been Bank of England over the weekend. It's like 2 weeks ago. I mentioned this in my last video. They mentioned about hiking rates before the end of this year, but honestly, that's been fully priced in. And to me, you know, with price on the pullback, like to me, this is just getting ready for end of month, like order flows. Okay, because like the thing is, like the market, it just moves in waves, and it just makes sense. You know, like to me, this sentiment is still completely valid. I probably want to see if price comes down to 137,200, and then here, this will be my high risk entry at 136,730. Okay. Ooh. Well, that's the wrong button. So, yeah, I probably want to see price come down to 136,500. Okay. Matches just above these equal lows here. Okay. So, you know, potentially we can come down here for some medium risk buys, but to me, just with the end of month, I'm expecting like a deeper pullback before we come down, come back up, or do a bit of a deeper pullback. Get in at those better buys, because you got to realize, you know, on a institutional level, like, you know, the people with the, you know, the whales, man, like they're not trying to buy up here. They want it to pull back because they know what the overall trend is. They know fundamentally that it's going to be bullish in the long term. They just want to get in at better price points, okay? And that's what your trading should be like. You want to get in at the best positions. Obviously, this is your high risk entry. And then once you pull back up here, once you start to break above here, candle bottom closures above here, that'll be, you know, your safer, you know, your medium risk entry to safe entry, and then this will be your safest entry by far once you clear above these relative equal highs. All right, that'll be your next entry. Like that'll be the safest entry, and you take it to these previous highs, but you know your reward is a lot lower. So you got to keep that in mind. So that's probably what I'm looking at for GU. Like I mean, we can adapt to sells, but I just know that sells are gonna be very slow. Okay, they can be very slow because like here, you know, we pull down, corrects, like literally corrects, like 1 4-hour candle just freaking corrects everything, and we pull down here, boom, and then we get like a 50% retracement, right? Here, I wouldn't be surprised if we get some strong rejections at this liquidity level, but then we can, you know, trade it to the previous candle body high, but then we can potentially start to break and retest below here, and we can get in for some better sells. Okay, but there is a potential for us to do a bit of a deeper pullback, but I don't really see that happening. So yeah, that's my bias with GU. Next thing is GJ. Okay, so with GJ, you know, we're just in this like we're starting. To me, this is just buy side exhaustion. This is just people taking profits, reaping the rewards, and as well, and a month lows. Okay, so on this high time frame structure, you know, we actually did break below these equal lows here, and the next price I'm probably looking at is roughly 155,500, which is near on our psychological price level. Okay, to me, I wouldn't be surprised if we do a deeper pullback to 153,600. Okay, so because potentially we can pull back here, start to break and retest, and boom. Or we can do a deeper pullback, because I won't be surprised if this actually happens, but I don't think Japanese yen is gonna create that much strength in the short term. Okay, unless their monetary policy meaning, you know, is very hawkish and they start to phase out I guess the COVID relief program. Yeah, and then 110%, you know, we can get some short-term weakness with the pound, and a lot more money being inflowed into our safe haven currencies in the short term. Okay, in the short term, because overall, like, it's bullish. Like, to start selling this, like, to me, like, you're just selling a pullback on the high time frame, and realistically, I don't really like selling pullbacks. I mean, you can. It's just that if you try and sell a pullback, right, there's a very good chance that, you know, you sell a pullback, let's say at London Open, right? London Open, you know, this thing could, like, for instance, in GJ, it could move like 20-30 pips your way, right? Then comes like pre-NY, and it will just fully correct your move, like fully, and you're back to your entry. Like, that's why I don't like it. Like, to me, I'd rather wait for a price to pull back to a variable demand zone and take the buys up, like I have, and I've showed in my channel that I'm trading pullbacks, but it's very short term. Like, I know that, like, to me, I've already missed that you know, that trend move. All right, so I'm just trying to catch that pullback, just trying to grab a few pips in the market. But yeah, so this is my opinion on what is going to happen with GJ in the long term. So I won't be surprised if we pull back to 155,500, then come down on 153,600 with these relative equal lows. Okay, because realistically, for the market to continue rallying back up, you need to like the profit takers need to reap the rewards. Okay, then you need to pull back. Buyers need to get relieved out of market by sellers. You pull back to a more favorable demand zone. Okay. So next thing is USD Cad. All right. So USD Cad has been a strong bearish trend, obviously, with Dixie continuing to pull to the downside, and especially with the Canadian dollar, we've had, you know, good Canadian macroeconomic data. More importantly, we've had bullish oil. So you know, it was like at $85 a barrel. So so we do have to keep that in mind, because the correlation between the Canadian dollar and oil it's strong. You know, it's stronger than any other commodity currency out there. So with USD Cad at the moment, because with USD Cad, it loves to range, and then when it breaks out, it moves. So USD Cad, I'm looking at these highs here, and I'm looking at these equal lows down here. Okay, so highs at 124 psychological price level, and this will probably be about 123, 150, 150 or so. So what I'm really liking, if we do see Dixie continue to show more of a strong bearish structure, we can take the sells below here. Once we start to close below, get a nice retest and continue back down. However, there's a very good chance that, if Dixie starts to gain a bit of strength, starts to gain a bit of momentum, and yeah, we can potentially start to break above here. But like I said, I don't really have any fundamental reasons to start, holding long USD Cad longs. So yeah, so realistically for me, just that break and retest, and you take the sells down with USD Cad. Moving on to dollar, so probably one of the most important charts to be looking at today. So identifying these lows at roughly 93,600, these relatively equal highs at what's that, 93,800 psychological price level. So let me get rid of these so I can be a bit more clear for some people. Okay, so here, so roughly about 93,800 these highs, 93,600. So we got this high time frame order block being formed. Okay, so we do have to keep in mind that, like, honestly, the market structure on Dixie it's like, to me, it's like clean. It's so clean. So if we start to break and retest below here, we can take some corrective sells and get them pushed down to 93,200 from the current trend. But realistically, I won't be surprised if Dixie starts to break and retest above here, clear these highs here. But I don't think we're going to be here at the end of the month. Like, I don't think so. All right, so that's probably what I'm looking at for Dixie at the moment, and we can just use this as an indicator when we're trading our risk currencies against safe havens, or risk currencies against the dollar. So yeah, that's probably what I'm looking at this week. But yeah, I'll be very interested to see what actually happens, or where price is at the November meeting. But to be honest, I won't be surprised if we actually do continue back up to these highs here. Okay, so but potentially we could just see this happen here, because to me, this is just a bit of a bearish structure, but I don't think there's a big reason to start selling the US dollar just because of how valuable it's going to be in the coming months. All right, so moving on. Next one I do want to look at is gold. Be a very quick analysis on gold. Okay, so gold. Let me map out these levels here. Okay, so gold, man, to me, gold. I think I placed like 2 trades in gold last week, and there were some high risk like shorts. I think they were like, yeah, I forgot where I actually placed my trade, but yeah, and I'm placing some high risk shorts, very, very short lived scalps, which end up playing in my favor. But gold has been very messy, and I don't really like trading messy or like rangy markets, because when rangy markets happen, something's gonna happen, but something's gonna happen soon. All right, so with gold at the moment, in the long term, I guarantee you gold will be below 1,700 probably by Q2 next year. You can quote me on this, but I guarantee you gold will be below 1,700. I can guarantee you. All right, so with gold at the moment, we're seeing this bearish structure starting to form. I do want to see if we can actually gain some traction and come back up to 1830, because I'm just adapting to current price action at the moment. So if we continue in this bullish trend and failures to break below these previous lows and actually these previous highs here, we can definitely take some continued gold longs. But obviously I wouldn't mind if you get like a retest here and continue back up. break above 1800, and then potentially snap back into this previous range here. Okay, that's probably what I'm looking at for gold at the moment. Like I said, you know, it's been very rangy at the moment, but you know, there's probably one yeah, it's probably what I'm looking for gold this week. As I said, I don't really have any need to sell gold at this point in time. Like, I don't have enough confirms to sell gold if I'm tapping into current price action. Okay, so overall, you know, it's still bullish on gold, but honestly, wouldn't be surprised if we potentially, you know, get a retest to these lows here, but I don't really see that happening. Like, to me, if we get like a solid retest here, retesting these previous highs, snap back into this previous range, we can potentially just play in this little range here. Okay, so that's what I'm seeing on gold. Next thing is Dow Jones. I hope this video doesn't go for too long, but so yeah, Dow Jones are currently at all-time highs at 35,600. So, you know, I'm still very bullish, as always, on stocks, you know, on the stock market overall, because it's just been propped up by the Federal Reserve's asset purchasing program. So what I'm saying is, like, if we can get like a solid retest like 35,500, you know, these relatively equal highs here and these highs here, right, I probably want to see like a retest here, right, retest here, get in at some better buys, and if those to close below, you can take some buys up. All right, however, if we close below here, wouldn't be surprised if we come down to, what's that, about 35 470, or potentially even digging deep, a bit deeper at 35k. Okay, so overall, that's what I'm seeing happen. Okay, US30, like, I don't really have a need to sell US30. There's no fear in the market for me to start selling, but obviously once we start to close above these liquidity levels, yeah, we can definitely take some quicker sells in the short term. All right, and lastly, you know, let's quickly have a look at global equities. Global equities, bullish across the board, like usual. You know, US30 as discussed, all-time highs. Nasdaq, we're nearly at all-time highs, because all-time highs is about 15,689. So yeah, we're starting to retrace back into 15,300, but if we start to break above 15,400, we can continue to take these buys back up to the all-time highs. Okay, but I'm just very cautious of the, you know, of the tapering concerns, because I know with tapering it's going to cause some short-term, you know, bearish structure, and it's probably going to cause a bit of a range before we have more indication of what the Federal Reserve wants to do, and how, you know, tapering is affecting the market, and, you know, what they actually want to do in the coming months. Okay, so, you know, Chinese stock index bounced off these roughly 15k lows, now back up to 16k right now. ASX 300 starting to rally back up. Japanese, the Nikkei, you know, we did have like a sharp pullback just with those fear headlines from the Bank of Japan, saying that they still need to use their accommodative monetary policy, and continue to provide fiscal assistance, but that's starting to be phased out. And, you know, we did get some strong rejections just below these lows here, and now we're starting to push back up. We're certainly starting to push back up, but to me, if we can definitely stay above 28, roughly 28,200, those buys will be valid. Okay, so yeah, overall stock market is, the stonks are very bullish across the board. Obviously FTSE has been appreciating a lot more overall. So anyways, if you enjoyed the video, please feel free to like and share. If you want, feel free to subscribe. Alright, thanks.